In today's video, we're going to be doing something really simple, and that is actually looking at a offer in principle or some indicative terms. Briefly, an offer in principle is simply given the information that has been provided. It is what the lender thinks that they are able to lend on any particular deal. So on this deal that we've got here, it's all made up information, but it is very similar to a couple of deals that we have had recently. Just the numbers have been tweaked, etc., for obviously privacy's sake. So the basic things that they will have is obviously the lender name. So we've got Lamprey Capital, that's us, the indicative terms, and here's exactly what that looks like. And we'll run through each of them just to make sure there is no confusion. So the name, this will be the entity that is actually borrowing the money. So it won't be your name if you're doing it via a limited company. It would be the company. If you are doing it in your name or a partnership, then it will be in that name. The security address is obviously the property in which the lender is going to take security over. So that means the one that they are actually lending the money to or against. The charge, this is what ranking charge that they will take. So there is first, second, third equitable charges, and 99% of development lenders will always do a first charge or only lend on a first charge basis. Then we've got the current value and the end value, so the GDV, the gross development value. So in this case, you've got 55,000 is the plot of land as it is, and then the end value once it's all built is 280,000. The net loan amount, this is the net figure, so the figure that you will actually get in your hand after all the fees. So on this case, it's 130,000, and that was for all the build costs on this deal. The gross loan is the net loan plus all of those fees. So it's 164,684 and 82p. The term is simply the how long you have that loan for. So some people actually confuse the term for the drawdown basis in which they're going to be getting their money. But no, that is the total term. So if you think your build is going to take 12 months, you do not want a 12-month term because you'll be panicking at the end to make sure it's finished and then you can exit the deal. The arrangement fee, this is built in to the gross fee, and this is the fee that the lender charges in order to facilitate this deal for you. So in this example, it's 3%, which is higher than most, and they are charging that based on the total gross loan. Then the broker fee. So if we were doing it for you, this is what we would charge. It's a 1% of the gross loan, and that, as you can see, totals £1,646. One important thing to note as well is the interest rate. This is the monthly rate that you're being charged, and it is important to understand how the lender's actually charging that interest. So in this case, the interest is to be retained from each drawdown based on the remaining term. So you can have either rolled up or retained interest. They work very similarly in terms of actually which one works out more in the end or less, because it all depends on when you draw down. But typically retained is slightly more expensive, and that is because you are paying for the interest from each bit. It's deducted from your loan as opposed to, as you're taking the loan, rolling up, thus the name, adding on top of it. Then there's the deferred arrangement fee, which is what this particular lender calls it, but in reality it is just called the exit fee. And that is a charge that they put on once again to basically earn a little bit more to allow them to have a slightly cheaper rate. This one is maybe a bad example because it is quite expensive, and most of them you won't be looking at these sort of figures. Then the commission payable, again, this is what is payable to the broker from this arrangement fee. So a lot of people confuse this as an additional charge, but this often comes out, or this always comes out of the arrangement fee. Then normally they will have an initial estimate for the valuation and for the legal costs. So again, those are the two major upfront costs for small developments that you'll be looking at. As you get bigger, they'll also have quantity surveyor, so QS or MS fees for you to have a look at. Then they typically have a few little bits and pieces about what they do, how they work. And in this case, they're obviously saying how transparent it is and everything. And then on development drawdowns, we will zoom in here. They will also, in some instances, not all of them, will actually give you a breakdown of what they estimate the drawdowns will look like. So in this case, they've broken it down into stages of a drawdown of 4 months, which is day 1 drawdown, and then month 1, month 2, month 3, and month 4. So you've got 5 total drawdowns over 4 months. And it allows you to see the total interest, all the fees, etc., based on each one. So again, we'll just run through these really quickly. So the gross loan released, as I mentioned earlier, this lender does retained interest. So this gross loan is the gross on the interest that they are lending. This is the gross of the interest they are looking to lend, not what you're going to be receiving. So that figure includes all of the fees. Then you've got the gross running total, which is obviously the month 1. And as you'll see, they just add on to each other. Then they've got the total arrangement fee and broker fee added together, the legal costs, all the interest for the term coming out, the monthly installment for the drawdown. So this is the interest. And then this is the running monthly. So again, the interest, but this is based on all the additional ones based on the running total. And this is the total interest. This will be the monthly interest times by the term that's remaining. And that will leave you with 15,000 in this example, which is your net loan that is actually received by the borrower after all of these fees. So it looks quite expensive, and the first drawdown is always the most expensive because all of the big fees come out at that time. So you'll see we went from 29,000 all the way to 15, and that's because of the legal fee, the arrangement fee, the broker fee, and all the interest being retained for the entire term. And it gives you generally an indication of the loan to value. And as you follow it through, each of these, it starts getting a bigger and bigger number as you go, because you'll have borrowed more and more as you're building the property, and thus the interest gets better. But you'll note on the second drawdown, it's 36,000 for this particular drawdown, where the net is 30. And the reason for that is the only real cost that's coming off of that is the interest fees there, as well as a small fee for the arrangement fee and the legal fee on there as well. So this particular lender, which we've obviously changed to our details, charges a small legal fee because they do a new mini loan document or extension agreement for every drawdown, as well as obviously they take a small cut. They do not pay anything to the broker out of this particular lender, only out of this original one. And as you can see, you draw down the funds. They have their loan to values that they are against the end value, the running totals, and that's it. They are fairly simple. But if you've got any questions or anything like that, let me know, and I'll be doing one based on bridging finance as well, which is even easier than this. Thanks so much, and if you like this, do follow, and if you've got any development projects you'd like us to look at, please do get in touch with Lampe Capital through the link below. Thanks so much.